Let's start with clause 2, para 3, CARO 2020. Simple clause, beautiful simple clause. Whether your client is conducting physical verification of inventory at reasonable interval or not, you have to explain. If they are conducting, whether the coverage and the procedure as per you is appropriate or not. If there is any discrepancy noticed of 10% or more, if so, whether the same have been properly dealt with in the books of account or not. See, ideally, they should eliminate all the discrepancies, like they should adjust everything. But in CARO, you have to report if the discrepancy is 10% or more, whether the same has been dealt in the books of accounts or not. With respect to physical verification, right? So, clause has two different things. One thing is about the working capital limit, that is separate. Point 2. Point 1 is simple about the physical verification. Whether your client's management is conducting physical verification of inventory at a reasonable interval. See, reasonable interval is not defined anywhere. You have to apply your professional judgment according to the client's business and the nature and the size of that entity. They have to decide the reasonable interval, whether it is 15 days, every 1 month, every 6 months, every year, whatever. But it cannot be more than a year, right? And if yes, so whether in your opinion, the auditor, the coverage and procedure of that such verification is appropriate. And if there is any discrepancy noticed during the physical verification, whether the same has been dealt with in the books of account. Easy? Now, your client was smart but didn't have money. Their client was smart, they were good in business, but they didn't have money. So they took working capital loan from bank or any public financial institution. When they took loan, the aggregate, and they took that working capital loan from multiple banks, and the amount became more than 5 crores. Aggregate amount of that working capital limit sanctioned became more than 5 crores. Okay? See, they have taken working capital loan. That means security में कुछ तो देना पड़ेगा. They will have to give some security. Normally वो security working capital loan का current asset ही होता है. So every time your client has taken a working capital limit of more than 5 crores from any bank or financial institution or in aggregate with all those banks and PFI, and on the basis of security of current asset, whether your client has been sending a statement which is called as quarterly statement, and whether that statement is in agreement with books of account or not. If not, give details. I'll give you an example of this, what happens. For example, in one of the company where I was working, we had a working capital loan of like taken the limit of some 10 crore rupees or something. I think that was Citibank. Every month end, they are saying yahan par quarterly, no? Our bank made us do that on a monthly basis. Every month, I had to, that was my first job. I'm talking about year 2016. I had to send a statement of inventory to Citibank, right? There they're saying quarterly statement. I used to send that on a monthly basis. In that statement, because we have given inventory as a security, so in that statement, there was the serial number, description of inventory, type, whether it is raw material, trading, WIP, or finished goods, right? And then what is the quantity of it? What is the value of it? Because the person who is giving you so much of loan, they want to be secured about that loan, right? So they want to see what is the value, total value of this inventory. right? So here it is a mandatory requirement of quarterly returns. So if your client has taken working capital limit in excess of 5 crores, you have to see whether they are sending this kind of current asset statement or inventory statement, whatever that is required by the bank, on a quarterly basis, and whether that statement is in agreement books, in books of account. For example, I have given this statement to bank, which has a inventory of about some 16 crores, right? But in the books of account, it was 15 crores 59 lakhs only. Are they in agreement? No. So as an auditor, if you see, just ask them to give the copy of all that statement that they have sent, right? Ask your client. And then match whether at the month end that current asset value was same as the value shown in the statement or not. Easy. Can you do that? It is very logical, no? Like whatever they are writing in the CARO, it is not something like, why are they asking this? Why so this requirement? No, it is very logical. They just want to create transparency, nothing else. Whoever is the user of financial statement, whoever is the person who has invested in that company, they need to know whether you're conducting your business properly or not. Make sense? That is all about clause 2. It's and like it is important, but it ends here.